Today, we're reviewing the iFunds instant funding prop firm. Here, we'll discuss the pros and cons of this firm and if it's a good deal or just a waste of money. So, instant funding prop firms have been becoming increasingly popular nowadays, and a few of our clients at Prosperity Algo have actually asked me to look into this prop firm. And because of that, I did a deep dive in all of their trading conditions, on the actual accounts they offer, and effectively the pros and cons of the firm. And because of that, I thought it might be helpful to make this video to kind of discuss some of the unique features of this particular prop firm, as well as instant funding more generally. Moreover, I'm planning to start a new prop firm series where I go through prop firms one by one and essentially assess if they're good deals worth your money or not, similar to what I do for bots. And the reason why I'm doing this is now with the prop firm bundle, we're increasingly growing our community of users using our bots to pass prop firm challenges, and people often ask for advice and suggestions as to which ones are good. And I think if we essentially methodically go through prop firm by prop firm, we can assess and kind of separate the wheat from the chaff and pick the ones which are actually good. So my usual criticism about instant funding prop firms is that they're just remarketed brokers. And effectively, if you go to many brokers, they'll give you 1,000 to 1 leverage or 500 to 1 leverage, and an instant funding prop firm will take your challenge or your cost of instant funding, and they will then 10x it to get the account size, and then they'll offer you 10 times leverage. So essentially, instead of saying, hey, put it in deposit, we'll give you 100 times leverage, it's buy an $1,000 account for $100, you get 10 times leverage, and then we'll give you 10 times leverage on that $1,000. So effectively, you have a similar amount of buying power with obviously more buffer room for drawdowns. So and then you have to apply the whole risk factor of actually getting paid and the rules, etc. So a lot of them I find tend to be inferior to brokers because of the buying power concerns. But the reason why I wanted to look at iFunds specifically is because of the amount of leverage they offer. And because of the amount of leverage they offer on different symbols, as well as the less stringent rules, they're actually giving you more buying power than a broker. So my most consistent criticism of instant funding prop firms doesn't necessarily apply here. So we actually did a few different tests, both in the trading conditions as well as looking at the exact conditions of the challenge, just to see what the pros and cons would be. So here we can see that the biggest difference between an instant funding firm and a one-phase or a two-phase is the massive cost relative to the account size. So here the smallest account they offer is the intern account at $2.5 thousand of funding, and you have to pay $250 to actually get that account. So here you're essentially paying 10% of the account. And then the bigger the account gets, essentially the percent which you're paying for the account decreases. So here on the ambitious, the 10K, you only have to pay $700 for that. So like the proportionate is significantly lower. And then if you look here, for instance, for the New York account, the $500,000 account, you're only paying $30,000, but still that's a relatively high percent. If you were to compare this to 500K and like account from a two-phase prop firm, this is obviously like astronomically more expensive. So you're actually putting in a pretty significant amount of capital to access that. But let's start with the cheapest one, just because many people don't have 30 grand to put into a prop firm account. So we can see here with a $2.5 thousand intern account, you have to pay $250 for it. So that means that you have to make, with a 50% profit split, 20% in the account to actually get that 2.5K. So that's a bit of a concern. And here at the same time, we can see that the profit split is 50%, the maximum overall loss is 10%, which is quite interesting. There's very few rules here. Really the main thing is, hey, like you can't lose 10% of the account. You can trade news, you can hold over the weekend, you can use third-party EAs, all of these different factors. The real big concern here is that you can't lose 10% of the account. So in many ways, they're actually quite similar to a broker in which you have a lot of flexibility, but there is almost a margin call level here, which corresponds to the maximum overall loss. So here we're saying that 10% of the account here would be $250, and you're paying $250. So yeah, like it's pretty obvious that you can't lose your deposit. So they're very, very comparable to a broker. So one thing that I really want to focus here is on the trading leverage. If you look at this particular instant funding firm, and if we pop over to their symbols page and we look at the margin requirements, they are really offering 1 to 100 leverage on including indices. So here 1%. On metals, I think on gold it's actually lower. They might be offering 1 to 200 leverage. And this is the really unique thing about this particular instant funding firm. Most of them do not do this. So if you were looking for an instant funding firm, the major advantage of this one is that they're offering you significant leverage because they're really very, very similar to a broker. And now if we go back to the front page here, we can see that, yeah, that's really the takeaway. This one compared to the rest is probably more expensive because you're essentially putting in, you're paying for your maximum overall loss. You're putting in a huge percentage of whatever the amount you can lose. So you're very much de-risking the operations for them. Because if you look at it from their perspective, they're saying like, hey, we're going to give you this instant funding account. You're allowed to lose $250 and you're putting in $250. Obviously, the risk profile decreases a bit as the accounts scale and increases for them, but they understand that enough people will fail that they're still going to make their money. So that's the big takeaway from this page and this particular firm. So far, expensive, but high leverage. So if you're looking for that, this could be perhaps an option for you. Before going into trading conditions, we have to ask ourselves, like, is this worth it when compared to a one-phase or a two-phase firm? And is this worth it when compared to a broker? The advantages to a broker is that you have significantly more room for drawdown. Let's say you were to put $250 into a brokerage account and use an insane amount of leverage. Any small move in your actual position, if you're using 100 times leverage, like if you lose 1% using 100 times leverage, you'd lose 100%, right? So you are very sensitive to any small move in the actual positions which you're holding. And because of that, you could very rapidly be margin called. Using this solution, you're almost increasing, it's almost like having a 10x deposit bonus. So you're significantly increasing your ability to withstand drawdowns while using high leverage. So that is the main advantage over a broker. You have significant room to take drawdowns and your risk is capped because of the fact that you only put $250 in or into the account. So you can't have you can't lose more than you put in. Despite most brokers, that won't happen anyway, but something else to keep in mind, your total risk is capped. So that is an advantage over a broker. Now let's compare it to a one-phase prop firm. The main disadvantage compared to a one-phase prop firm is if you achieved the same results in a one-phase, you probably would make more money. What do I mean by that? Here, in order to recuperate your $250, you have to make 20% on your account with a 10% maximum overall loss. Let's say you made 20% in a Blueberry funded one phase, or it's not fair because they offer super low leverage, but Rocket 21 one phase. You would not only get repaid your initial challenge fee, I'm not 100% sure with Rocket 21, but many of them will repay your initial challenge fee. You would then also, so you'd recuperate your initial investment. And on top of that, you would also be able to make, let's say, 10%, because the first 10% you would pass, the second 10% or 11% you would get paid out with, right? So essentially here, to just recuperate your investment, you have to make 20%. If you were to make 20% in a one phase, you would recuperate your investment because you'd get refunded, and you would make 10%. So if you just compare them neck to neck, if you're able to pass a one phase, it doesn't make a ton of sense to actually go out and buy an instant funding challenge. And yes, you could say hey, there's fewer strict rules. There is also the fact that there's typically higher leverage. But effectively, if you're able to find a high leverage one phase, and if you're able to just trade a system which is systematic and does not exceed the risk parameters, you should be better off, right? So just there are benefits to a broker. There's not a tremendous amount of benefits if you're willing to take comparable risk in a one phase. So oftentimes something like this is just not a great deal. Therefore, this is why if you have a systematic strategy in place, there's often not too many massive benefits for an instant funding account. There are obviously exceptions depending on your situation, but that's really the big takeaway. Just compare what do I need to get to make my money back here? If I did that same result, even in an FTMO account, if you made 20% in an FTMO account, you would pass and make 5% on a significantly larger balance, right? So just do the math to compare and see if it's worth it for you. But at least the cheap accounts here, in my opinion, are not particularly worth it. So now, not to make this video too long, but the other big downside of this versus a broker, to kind of go back to our pros and cons between brokers and prop firms, the prop firm cons is that if you did the same amount in a one phase or a two phase, you would probably make more money. The cons compared to a broker is that your trading conditions are way worse. They use iFunds uses the BASX broker as their technology provider, or at least their liquidity, kind of liquidity provider, their price feed provider. So if we go and look at the BASX MT5 terminal here, and one of our clients was chatting with support and got this information, I took the liberty of running a few back tests using some of the bots in our prop firm bundle. And I'm also going to tell you guys, if you want to trade these types of conditions, what type of system should you use? So here I ran our German Lightning bot, and as you can see, the results are actually very solid. And this is because German Lightning uses a very high risk reward, not super scalpy method of trading. And because of that, in 1 year, we turned, or a little bit over 1 year, we turned $10,000 in this case into a bit over $16,000, or around $16,000. So that's going to be around, let's say, a 50% annual return. So pretty solid. And here we look at our back test, we were staying under the 10%, and this is working well. So over the same period, I also did this back test with an 8 cap, which has excellent trading conditions. And over the same period, we turned that $10,000 into around $84,000. So you have to note that here, our annual returns were in the tens of percents lower. This was largely due to higher spreads and poor trading conditions. So if we now go back to the BASX MT5, we can see that our spreads for gold are around 36 pips, our spreads for US 30 are 480, and our spreads to the DAX are 420. And because of this, you're really trading with spreads which are 3 to 4 times higher than they would be on a good broker. So that is definitely problematic. It worked with German Lightning because it has more generous take profit and stop loss levels. But let's say I run our golden time bomb system here, which trades gold, and it's not super scalpy, but it's slightly more scalpy in nature. And if I run this here on BASX, and I will do the same test on 8 cap just to show you guys the difference and what this would look like. So as you can see, it is obviously making money. This is a great trading system, but it's pretty choppy. And I'll let that finish. So yeah, we made money, but it's not amazing. And why is this the case? Because with gold, or trading something which is more of a scalping style system and less of a like swing trading style system. Let me just find the same bot here. I have many bots. And here we go. And let's say we run it over the exact same time period with the same settings here. We're going to see that the results are just significantly superior. And this is really the main takeaway here, right? Like, very bad trading conditions will adversely impact your profitability. So the main takeaway is that here, the downside versus a broker is that you will be using significantly worse trading conditions, but you have a little bit more room if you want to use significant leverage. Your buying power is less sensitive to swings because of the fact that you'd be heavily levered if you were to use max buying power with the broker. The downsides to a prop firm, to a traditional one phase or two phase, is that simply if you can make the same amount of money in an instant funding account to recuperate your cost, you can make more money in a prop firm. Therefore, kind of to conclude, this fund, if you're dead set on instant funding, this one's not bad, but it's in many ways just not that great of an option more generally. So guys, hope you found this video useful. Leave me a comment if you have any questions, and take care.